Welcome to today's weekly technical analysis for the week of June the 3rd to the 7th. It's been up and down markets for the week. So let's take a look at the charts. Here we have the S&P TSX 3-year weekly chart. As you can see on the far right-hand side, we broke through the 12.5 mark, so that's not what we want to see. Again, on the MACD and the MACD histogram, as you can see, the histogram has so slowly shrank, and it did grow on the downward side this last week, obviously because of the following week. But the MACD line is still above the signal line, or below the signal line, technically, but I would say it's flat, so I put it as the blue. The momentum with the stock, clearly you can see is falling, but remember, when we're measuring on the 3-year weekly, the MACD and the MACD histogram are key. So what's positive about this is that it didn't close at its low, it actually closed higher, showing that there was some buying at the end of the week. Here is the 6-month daily chart. As you can see, the whole week was very negative on TSX as a whole, but again, didn't close at its low, closed higher. MACD and histogram obviously are quite bearish, along with the RSI and stochastic, but it looks like the stochastic is starting to turn here. There's an inflection point here, and the steepness of the decline here in the RSI is weakening as well. So it could be, especially with the buying at the end of the day, for it to close higher, could be the turnaround here as we see some positive gains as this starts to turn around. If it does not, again, the next level of support is 12.2, so we have to be aware of that throughout the week. Here is the price chart of oil. As you can see, over the last 6 months, it's gained almost 12%, which is great. Again, we kind of have been unable to break past 96 and change, but this is a really good uptrend, and of course, it's going to hopefully help push all price producers the profits higher. 3-year weekly chart for Enbridge has been a very, very tough couple of weeks for Enbridge, but it did hit support and did not break through, which is good. It closed above support here, which is always a good sign for the stocks moving forward. The MACD histogram, very, very bearish, nowhere close to being a turnaround, but it's still in the positive territory, and that's something we can look forward to. Hopefully this is the last week of this decline, and it begins to turn up higher. Momentum, definitely, as you can see, very, very away from the stock. It's at as low as it can go here. It pretty much is as low as it can go, so you can only hope for better days. On the 6-month daily, you can see it broke through 44, but it closed higher again in the week, which is a great sign. The MACD histogram, both showing bearish news, but as you can see, the histogram is starting to turn higher. The RSI is flat, which is a positive sign after such a steep turnaround. And we here on the stochastic, we have an inflection point again. So this could cross higher, showing the momentum is finally back with Enbridge. And around $44, you can see there is a lot of memories here. This could be a good basing point for the stock before it takes its next initial run-up. IMO, 3-year weekly chart. We have this inflection point here. It looks like there might be a cross to the positive, which is good. We've seen the histogram shrink continually, and hopefully they can cross the positive and head towards positive side of the territory. IMO for the last couple of weeks has struggled to stay around the $40 mark. 2 weeks before, it has pushed higher, came back down, but again closed near support, which is a good sign for IMO moving forward. You can see that stochastics and RSI both show the blue circles. Less positive about the momentum here, but we'll have to wait and see if the positive oil prices will continue to push IMO higher. 6-month daily chart. Thursday touched support, bounced back up, and then moved higher. Momentum is definitely with IMO on the daily chart, although we do see a negative crossover on the MACD histogram. Histogram bars are growing, so if IMO can continue to keep its momentum pushing forward, it'll break through 40 and then hopefully hit 41. So you know that if you're trading the 1%, there's not a lot of room to make it at the 40 mark. You want to wait till it either pulls through or moves lower. But again, good momentum signs here. If oil continues to go higher, it will definitely push IMO higher as well. Suncor 3-year weekly, a good run up over the last couple of months, but has struggled to stay above 32.5. If you look closely again, it opened quite low for the week, but again closed higher. Good signs here on the MACD histogram, and we can see that again positive crossover continues to grow. Histogram bars are fairly short and shallow, but they are still on the positive side, which is what we want to see. Momentum, not as such strong indicators of where the stock will move, but here again we see another inflection point for stochastic, so it may be something to watch for. On the daily, the 6-month daily chart, tough time last week, didn't really move too far, but there was some movement there. Again, closed higher than it opened on Friday. MACD histogram, not looking so positive, but the histogram bars have turned and are starting to shrink, which is a good sign when it's on the negative side. Momentum on the RSI is measured fairly flat, but on the stochastic we do see a crossover, especially at the low side of 20. That shows that there's room for the stock to move higher. So we could see it bounce back up to 33, maybe possibly even higher. But again, it depends really on the price of oil and whatever is surrounding Suncor itself. So on just looking on the charting side of things, a good momentum turn here on stochastic. I'll have to wait and see if that can continue with the RSI and into the MACD as the stock moves higher. But again, the oil sector looks to be something you could be looking at for a short-term trade. Royal Bank, ooh, not so good. 3-year weekly, we had the week before was a tough indicator because it closed lower than it opened, and the same thing happened this week as well. Closed below the 60 mark. Not good, not good, and not good. Looks like there may be a bit of a pullback with the whole housing mortgage issue. Some are saying that it's going to be a soft landing. Others are saying that it's going to be a hard landing. So it's difficult to see. Now, the next level of support would be at 57.50. There's quite a few memories there. But we'll have to, if the stock continues to push lower, that's where it's heading. As you can see, a bit of a turnaround actually on the daily charts. You can see the MACD histogram, very bearish. A lot of dropping even before last week. But it looks like we had a bit of a selling period, and we're back here at above 59, which is good. Friday's close is higher than its open. We see the momentum here on the RSI turning higher. Stochastic is already crossed, so there could be some strong momentum for the next week or so. As we see it push past 60, and 61 could be the bit of a barrier, but if it breaks through 61, it's definitely going straight to 62. We could, as you can see, over the last couple of months, it's had a nice basing period, came up, came down, could base again a bit between 60 and 61, more likely between 61 and 62 as we saw over here, but it's something to keep an eye on as well. So Royal Bank looking good in the short term. Toronto, Dominion here, TD Bank, 3-year weekly. Again, tough week, broke through 82. Momentum showing that the momentum is moving away from the stock. Here we have, it's a blue line because the signal line and the MACD are sandwiched together. Could go higher, could go lower, but let's take a look at the daily side to see where potentially it's going. Now on the daily side, it looks like their momentum is back with the stock. You have an inflection point here on the Stochastic, RSI has turned higher, which is always a good sign. MACD and histogram are showing bearish signals, but remember, we take more stock on the momentum indicators on the shorter time frames. Closed higher above support here at 82, so there's definitely room to move to 83 and beyond. Didn't stay too long at 83 as a level of resistance, more as a level of support, so you could see it push through 83 and then potentially hit 84. But it's a good sign here that momentum is with the stock. Makes for a good trading period right away. So looking at the Focus 5 in general on the dailies, looks like there's momentum with the stocks, and that's definitely due to the selling off occurring on the TSX. You know, it's been a little high as of late, so it makes sense for there to be profits being taken and everything else associated with that. So some good potential buys from the Focus 5. Let's look to gold. Here we have the price chart of gold, and 6-month daily chart. Gold tanked on the last day, down almost 19% over the last 6 months. So beginning of the year, we're up here at 16.5, 1650, and now we're closing in on 1400 altogether. So that's a big drop, a grand total of $321, but it can't stay this low forever. Here is CGL, the iShares Gold Bullion Fund. 6-month daily, not that great. Closed lower than it opened on Friday. Looks like the MACD histogram is showing that decline, and momentum is fully out of the stock. Now this chart, CGL, will track the price of gold directly as best it can. So you can expect when gold goes down that CGL will go down as well. Now this is HGD, the Gold Bull Plus Fund. So it's a leverage fund, so we have to be careful when we trade this. Again, gold went down, ETF went down, MACD and histogram are showing that decline, and you can tell definitely that momentum is against this Gold Plus ETF. So HGD, not looking so good. Again, probably will come down even lower as gold prices continue to remain suppressed. Or this is, sorry, HGU. HGD, as you can see here, took a nice run up because of the falling gold prices. The MACD histogram starting to turn around. The histogram bars are shrinking. Momentum is with the stock. So as long as gold continues to decline, this Bear Plus ETF will continue to rise. Closed at resistance, could potentially break through and reach up to $22 if gold continues its decline. Silver prices down almost $11.50 over the last 6 months. Was basing really well over the last couple of days, and then prices have been suppressed as well. Almost down 35% over the last 6 months. Here is a different, one of the new additions to our little weekly technical analysis. It's the iShares Silver Bullion Fund, follows the price of silver. Just a different option. Ticker symbol is SDR. And we can see not so good with the price of silver declining quite rapidly. Broke through support, lowest point in the last 6 months. So it's a pretty big deal. MACD and histogram are showing the decline, and obviously the momentum indicators are stay away. This is HUZ. Again, this is the Horizons Fund for ETF. With falling silver, same news. Broke through the 14, again, the lowest point in the last 6 months. So if you're looking to buy, this could be a potential for your buy and stash. But again, with falling silver prices, it's going to put negative pressure on these ETFs. And this is the Silver Bull Plus. Same thing. Negative downward pressure on the silver prices have forced all these ETFs lower. Silver seems to have been hit much harder than gold, and you can tell, again, broke through support to down this $10 mark, lowest in 6 months, and this will continue with silver being so poor. So for the week, we can expect equities to maybe have a potential rebound due to the indicators showing the turnaround, but commodities, especially gold and silver, have taken a beating and may continue to take a beating for the rest of the week. Oil looks positive, and we'll have to wait and see what factors occur during the week to push it higher next week. So here is our website. Check us out at www.traintoinvest.com. My email is joelchandran@traintoinvest.com. Any questions, concerns, criticisms, please shoot me an email. I would love to hear what you think. So that's it for us today. Have a great rest of the week, and we'll talk to you soon. Bye now.